Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Kita mulakan kelas kita dengan membaca Ummul Kitab Al-Fatihah. A'udzubillahi minasyaitonirrajim. Bismillahirrahmanirrahim. Alhamdulillahirabbil alamin. Arrahmanirrahim. Maliki yaumiddin. Iyyaka na'budu wa iyyaka nasta'in. Ihdinas siratal mustaqim. Siratal ladzina an'amta 'alaihim ghairil maghdubi 'alaihim waladdallin. Amin. Bismillahirrahmanirrahim. Alhamdulillahirabbil alamin. Wassalatu wassalamu ala sayyidina Muhammadin asyrafil anbiya'i wal mursalin wa ala alihi wa sahbihi ajmain. Ya Allah ya Tuhan kami, ampunkanlah dosa-dosa kami, ampunkanlah dosa kedua ibu bapa kami dan kasihilah mereka sebagaimana mereka mengasihi kami di masa kecil. Ya Allah ya Tuhan kami, kurniakanlah pada kami ilmu yang bermanfaat untuk diri kami, keluarga kami, agama kami, bangsa kami dan negara kami. Ya Allah ya Tuhan kami, berilah kepada kami kejayaan di dunia dan di akhirat. Ya Allah ya Tuhan kami, jadikanlah kami orang-orang yang bersyukur. Rabbana atina fid dunya hasanah wa fil akhirati hasanah wa qina azabannar. Alhamdulillahirabbil alamin. Boleh dengar ya? Boleh dengar tak?
Boleh, Sir.
Okay. Okay, so in the previous class, we have read the question. Okay, that is second question. And today we are going to discuss on how to answer this question. Okay. Jadi pada kelas yang lepas, kita bincang tentang soalan ni lah. Ya, soalan Pearl, Consolidated Statement of Financial Position and Consolidated Statement of Profit or Loss, and other comprehensive income for Pearl Berhad for the year ended 31st December 2021. Okay, so kita dah baca soalan hari tu dan akhirnya kita kena prepare statement of cash flow. Okay, statement of cash flow using the indirect method. Okay, jadi kita recall apa yang kita dah baca hari itu. Number one, additional information. There is an acquisition. There is an acquisition of another subsidiary that is 80% interest in gold. Okay, and the consideration is 12 million. Okay, 12 million comprised of 5 million ordinary share valued at 2 ringgit each, and the rest 2 million in the form of cash. So there is an outflow of cash amounting to 2 million. At the same time, there is there any cash inflow from this acquisition? We cannot see from here the acquisition. Okay, the new company comprised of trade receivable, inventories, property, plant equipment, trade payables, and long-term borrowing. Okay, and the non-controlling interest was measured at the proportionate share of the fair value of the subsidiary on the date of acquisition. And then included in the operating expense are depreciation on property, plant equipment, impairment of goodwill, impairment of intangible asset, and also investment in associate. Impairment of investment in associate. Okay, the depreciation, impairment of goodwill, and impairment of intangible asset are not known. Intangible asset comprised of new patent acquired by Pearl Berhad amounted to 25 million, including legal cost of 500,000 paid by check. Land with a carrying value of 14,700,000 was disposed of at a profit, and this was the only sale of land during the year. Okay, so actually we can check from the statement of profit or loss, is there any gain? Yeah, there is a gain on sale of land, 20,100,000. So that is the one. And then for the acquisition of new property, 52,800,000 of the total cost was paid by check. and the remaining was financed through issue of shares, issue of ordinary share. So the cost of the new property is not 52,800,000, but in the form of cash is 52,800,000. Okay. And then finance costs relate to interest expense incurred during the year 31st December 2021, and the short-term investment is highly liquid and easy to dispose of. Okay, so let's look at the answer for this. Okay, question 2A. Question 2A, question 2A is about what? Okay, let me share the second one, the answer. Question A is about to discuss, to discuss the required disclosure in consolidated statement of cash flow if a subsidiary was acquired during the year. So what are the types? What are the information that need to be disclosed? And we look at the answer, what to be disclosed if we acquire the subsidiary during the year. So when a subsidiary is acquired during the year, the purchase consideration may include cash, which means there is a cash outflow. There is a cash outflow. So this cash outflow need to be disclosed in the statement of cash flow. Secondly, the asset of the subsidiary may include cash, which means there is a cash inflow. So this one will also be disclosed in the statement of cash flow. So we are offsetting the amount. We are offsetting the amount that is there is a cash inflow and there is a cash outflow, and will be stated as an item. As an item, acquisition of subsidiary. Number 3, the cash consideration paid will be set off against the cash balance. Okay, so basically number 1 and number 2 will be set off in the subsidiary on the acquisition date. So actually number 1, number 2, and number 3 is the same. Okay, we identify number 1 and we identify number 2, and then we offset number 1 and number 2. And then the net cash flow from the transaction will be disclosed as cash flow investing from investing activity. And then any cash dividend received from the subsidiary by the parent is not disclosed in the statement of cash flow. Any cash dividend received from the subsidiary by the parent is not disclosed in the statement of cash flow. And lastly, dividend paid to non-controlling interest will be disclosed as a cash outflow from financing activities. So basically, number 1, number 2, number 3, number 4 is actually the same thing. Number 1, identify the cash outflow. Number 2, identify the cash inflow. Number 3, offset. And number 4, disclose as an item. That is acquisition of subsidiary. Okay, so actually number 1, 2, 3, 4 is only one item, and number 5, okay, cash dividend received from subsidiary will not be disclosed in the statement of cash flow. And lastly, dividend paid to non-controlling interest will be disclosed as a cash outflow from financing activities. Okay, next, we are preparing statement of cash flow using the indirect method. So we are going to start with net profit before tax. So from the question just now, the net profit before tax is 352,500. Okay, 352,500. Okay, and we have a few more adjustment, Out of these adjustments, we have depreciation on property, plant, equipment. We have impairment on goodwill. We have impairment on intangible asset. We have impairment, other impairment, And then we have finance costs. We have gain on sale of land, and we have share of profit of associate. So you can see from here, the item with single tick. Yeah, the item of single tick is basically the item that we don't have to calculate. So we can simplify from the question. For example, the finance cost. The finance cost, we add back the finance cost. Gain on sale of land, we deduct from the profit before tax and share of profit of associate. We also deduct. What is this impairment of AC? What is this impairment of AC? You can see from the question here. Impairment of investment in associate. Impairment of investment in associate. Can it be seen? Okay, and then about the depreciation of property, plant, equipment, and also impairment of goodwill, and also impairment of intangible asset. We need to open these three accounts. This account of property, plant, equipment, the account of goodwill, and also the account of intangible assets. Let's go through the account. First, let's look at the working for property, plant, equipment. Okay, we include the balance brought forward of the property, plant, equipment. It is 504,000. And then the balance carry forward 700,800. And then we have disposal of land 14,700,000. Okay. And then we have purchase. We have purchase of property, plant, equipment by way of paying by check 52,800. Okay. And then we have new subsidiary, acquisition of new subsidiary 7,900. Okay, 7,900. And there are two more items that we do not have that we need to calculate. So the first one is actually we want to know how much is actually paid. How much is actually paid by using the ordinary share capital for the property, plant, equipment. So we have to go through the ordinary share capital account. From here, you can see that ordinary share capital balance brought down is 411,000. Okay, 411,000. And then acquisition of subsidiary. Acquisition of subsidiary includes 10,000. Or actually 10 million. 10 million. Issue of 10 million. Actually, issue of 5 million shares at 2 ringgit each. So it is 10 million. Okay. So the balance carried down is 646 and 500. So when we calculate here, 411,000 ataupun 411 million plus 10 million is 421 million. When we compare with 646 million and 500,000, there is a difference. There is a difference of 225 million and 500,000. So from there, we know that this amount, okay, the increase in ordinary share capital is because of purchase of property, plant, and equipment, because this is the balancing figure. This is the balancing figure. So we put this one 225,500 in our property, plant, and equipment account. So by doing that, there is only one item left. Okay, there is only one item left in the property, plant, equipment, that is depreciation. So depreciation is 74,700. Okay, depreciation is 74,700. We put below the profit before tax as one of the adjustment, non-cash adjustment in our cash flow statement. Okay, what else? The second one is impairment of goodwill. Okay, the second one is impairment of goodwill. So we need to calculate the goodwill first. Goodwill for the new acquisition. Okay, acquisition. Okay, so we need to calculate the goodwill first. How much is the goodwill, right? Okay, so acquisition of Gold Berhad, the consideration transfer is 12 million. And 12 million is comprised of cash, 2 million, and ordinary share capital, 10 million. Altogether, it is 12 million. And then let us find what is the value of net asset of gold on the date of acquisition. So what is the value of net asset of gold on the date of acquisition? So we can refer back to the question. We can refer back to the question. We can refer back to the question that actually, okay, the acquisition of the subsidiary, okay, and the subsidiary comprised of trade receivable of 4.8 million, inventories of 2 million, property, plant, equipment of 7.9 million, trade payables of 1.2 million, and long-term borrowing is 1 million. So we can add together that figure. Trade receivable 4.8 million, plus inventory 2 million, plus property, plant, equipment 7.9 million, minus trade payable 1.2 million, and minus long-term borrowing 1 million. How much? We get that figure? Dapat tak figure tu? 12,500,000. Dapat tak? You get the figure? 12,500,000. So it is 12,500,000. And the non-controlling interest just now is 20%. So 12,500,000 times 20% equal to 2.5 million. 12 million plus 2.5 million equals to 14.5 million. Compare with fair value of net asset of gold on the date of acquisition, 12.5 million, and we get a goodwill of 2 million. Okay, get a goodwill. So from this 2 million, okay, we go through the goodwill account. Yeah, goodwill account balance brought down is 78,750, and carried down is 57 million. Yeah, brought down is 78,750, and carried down is 57,500. And then in the debit side, we can see that for acquisition of the new subsidiary, we get a goodwill of 2 million. So there is a balancing figure of 23,750,000. And this 23,750,000 is actually the impairment of goodwill, and we put under operating activities. Okay, we put under operating activities. Operating activities yang kedua. Okay, so by depreciation, we have impairment of goodwill, and then impairment of intangible asset. Yeah, impairment of intangible asset. How much is the opening balance of intangible asset? How much is the closing balance of intangible asset? And how much is the purchase of intangible asset during the year? And from there, we will find the figure for impairment of intangible asset. Okay. So the balance brought down of intangible asset is 72 million, and the balance carried down is 95,400,000. And the purchase of the new intangible asset, that is patent, is 25 million. So there is a balancing figure of 1,600,000. So 1,600,000 is actually the impairment of intangible asset. And then we have another one that is investment in AC. Investment in AC, the balance investment in AC actually investment in associate. The opening balance is 100 and 2,000. Okay, investment in associate. Okay, we put here ASOC. Okay, investment in associate, balance brought forward is 102 million. Balance carried forward or balance carried down is 168 million. Okay, actually, there is no new investment in associate, but there is a share of profit of 99,900,000. Okay, 99,900,000, and there is also impairment. Impairment of associate. Impairment of associate is 5,600, and the balance, the balancing figure is actually the amount of dividend, and this one impairment is 5,600. Okay, dividend nanti kita akan masuk dalam financing activity. Okay, so semua item dalam cash flow from operating activities. Okay, kita dah masukkan. So kita ada depreciation, impairment of goodwill, impairment of intangible asset, impairment of associate. Okay, finance cost, gain on sale of land, and share of profit of associate should be arrived at 347,150,000. Okay, kemudian kita ada changes in working capital. How many items that we have? We have increased, we have inventory, we have trade receivable, and we have another one that is trade payable. Okay, kita ada tiga. Increase inventory, dia kata increase, and then increase in trade and other receivable also, and there is a decrease in trade and other payable. Okay. So kita tengok account masing-masing ni, balance brought down, balance carried down, kemudian changes in subsidiary semualah. Okay, so kita tengok kat sini. Okay, the first one is trade and other receivable. Trade and other receivable, the balance brought down is 90 million, and the balance carried down is 129 million. Okay, so during the year, the amount has been increased because of purchase of new subsidiary, and the amount of trade and other receivable of subsidiary is 4.8 million. And we have a balancing figure here in the trade and other receivable that is 34,200,000. Okay, 34,200,000 in debit side of the trade and other receivable. So it is an increase. Increase means outflow. Increase means outflow. Next, inventories. Inventories. So inventories balance brought down is 136,500,000. Okay, and then balance carried down is 165 million, and then the new subsidiary is 2 million, and the balancing figure is 26,500,000 debit side. So this is also an increase. Remember, an increase in current asset means outflow. Okay, and we have another one that is trade payable. Trade payable here, trade and other payable, balance brought down, the credit side is 121,500, and the balance carried down is 120,900. And then The new subsidiary brings 1.28 million trade and other payable, and okay, the balancing figure is debit side. Yeah, the balancing figure is debit side. Debit side of the trade and other payable means a decrease. So decrease in current liability means outflow. So we have three outflow. Yeah, we have three outflow. The first one is inventory outflow. The second one is trade and other receivable outflow. And the third one is trade and other payable is also outflow. Okay. Okay, so the changes in working capital all are outflow. And then we arrive at cash generated from operation, 284,650,000. Then we have interest paid and tax paid. Let us go through the interest account and tax paid account. Interest account and tax paid account. Okay, the first one, interest payable account. There is a balance brought down of interest payable of 19,500,000, and there is a balance carried down. There is a balance carried down of interest, 13,500,000. And in the statement of profit or loss, there is a finance cost of 9 million. Finance cost of 9 million. And the balancing figure is 50 million. Yeah, 15 million. This one is actually interest paid. Yeah, 15 million. Debit side of interest payable means credit side of cash. Okay. And the second one is tax. So tax, balance brought forward of tax is 42 million. Balance carried forward is 37,500,000. And tax charge during the year in the SOPL is 79,500,000. And the balancing figure is tax paid 84 million. So we have paid the tax 84 million, and we have to pay interest also. And we have paid also interest amounting to 15 million, and we bring the amount in the statement of cash flow there. So at the end, the net cash inflow from operating activities is 185,650,000. Okay, so that is for cash flow from operating activities. Okay, now we go through the cash flow from investing activities. The cash flow from investing activities. Okay, we have how many items? We have 5 items here, and we can search one by one. The first one is acquisition of property, plant, equipment. The second one is acquisition of intangible asset. The third one is proceeds from sale of land. The fourth one is acquisition of subsidiary. And the fifth one is dividend from associate. Dividend from associate. So we should put here ASSOC instead of AC. It is confusing when we put AC as SOC. So acquisition of property, plant, equipment. Just now we have been given with information that for purchasing the new property, plant, equipment, the company pay by cash 52,800,000. So we just take that figure and include here. That's why the tick, yeah, the tick is only one because the information is already given. So this is actually a free mark. Secondly, acquisition of intangible asset. This is also a free mark, 25 million. The third one is proceeds from sale of land. Proceeds from sale of land. Okay, so this one we need to see the additional information. Is there any information about proceed from sale of land? Okay. From sale of land. Let's go through the additional information. The land with carrying value of 14.7 million was disposed of at a profit. Okay, 14.7 million disposed at the profit. And how much is the profit? The profit is 20,100,000. So we add the two figures. Yeah, 14 million 40,700,000 plus 20,100,000. So the proceed from sale of land is 34,800,000. And then acquisition of subsidiary during the year. Okay, the subsidiary did not bring any cash. Yeah, the subsidiary did not bring any cash. The subsidiary has many other assets but not cash. So the company, when the company acquired Goldberg, the company pay cash 2 million as part of the consideration transfer. Okay, just now the company paid 10 million in the form of ordinary share and 2 million in the form of what? 2 million in the form of cash. So we put here cash. And dividend income from associate. Okay, dividend income from associate, we need to go through the associate account because, okay, we do not know the amount. Okay, let's go through the associate account. Okay, the balancing figure here, the balancing figure of associate. The balancing figure is 28,300,000. 28,300,000. So that is actually the amount of dividend paid by associate to the company, and we should include in our investing activities. So the cash flow from investing activities, the result is negative because more payment as compared to receipt. Okay, so 16,700,000 is net cash outflow, actually net cash outflow, not inflow. Net cash outflow, OUT, outflow. Net cash outflow from investing activities, okay, amounting to 16,700,000. And lastly, we have cash flow from financing activities. So cash flow from financing activities, okay, we have 3 items here. The first one is repayment of long-term borrowing. Second one is dividend paid to shareholders. And the third one is dividend paid to non-controlling interest. Okay, we go through the long-term borrowing. Long-term borrowing, balance brought down of long-term borrowing is 78 million. The balance carried down is 69 million. And the subsidiary brings long-term loan amounting to 1 million. So the balancing figure is the payment of long-term borrowing. Okay, debit long-term borrowing, credit bank. It is a payment. Okay, secondly, it is about dividend paid to shareholders. Dividend paid to shareholders. So for dividend paid to shareholders, we go through the dividend payable account. Opening balance of the dividend payable is 53,400,000, and the carried down is 61,800,000. Okay, and then from the retained profit of the company is 74,400,000. So when we total them, 53,400 plus 74,400 minus 61,800, we get a balancing figure of 66,000. Okay, ataupun 66 million. So this 66 million is actually the amount of dividend paid. Okay, the amount of dividend paid. And we have another one, payment of dividend to non-controlling interest. Okay, so the non-controlling interest, the balance brought forward is 55,500,000. And then when the new subsidiary comes in, the non-controlling interest increased by 2.5 million. At the same time, from the statement of profit or loss, we can see that the current year profit attributable to non-controlling interest is 58,200,000. Okay, 58,200,000. So when the balance carried forward is 63 million, we have a balancing figure of 53,200,000. So this 53,200,000 is actually a dividend paid by the subsidiary. Yeah, dividend paid by the subsidiary to the non-controlling interest. Okay, so I believe we have discussed all about this question. Okay, only one item left, I think. Okay, only one item left that we have not discussed just now. Okay, that is this one is just now we have calculated, yeah, disposal of land and the amount is 34,800. Okay, there is one more thing left. That is the reconciliation of the balance. Reconciliation of the balance. Okay, so the cash and cash equivalent. After we arrive at the net cash inflow from financing activities, actually the cash from financing activities is also outflow. So we put here outflow. What is today's inflow? Outflow, yeah. What is outflow? So only operating is inflow. Yeah, investing is outflow. Financing is also outflow. So we add the three. Operating 185,650 minus 16,700 minus 129,200 equals to 39,750, and this one is net increase in cash and cash equivalent for the year 39,750,000, and we add the cash and cash equivalent at the beginning of the year 77,250,000, and at the end the cash and cash equivalent at the end of the year is 117 million. So how we arrive at 77,250 and 117 million. Okay. For 1st January 2020, for 1st January 2020, the total is 77,250. Actually, this one is 31st December. Let me correct, yeah. 31st December 2020, and this one 31st December 2021. Okay. So for 31st December 2020, the cash and cash equivalent comprise of short-term investment 52,500,000 plus bank 24,750,000. So altogether it is 77,250,000. And yeah, on 31st December 2021, 31st December 2021, the value is 170 million, comprised of short-term investment 79,500,000, and secondly bank, yeah, 37,500,000. So altogether is 117. Okay, 117. So for those who are interested in taking picture, okay, I would like to let you take the picture for the answer. Okay, ini adalah jawapan untuk soalan A. Okay, kalau nak ambil gambar, okay. Untuk soalan B, bahagian atas. One is the bottom kat bawah. Okay, this one is the cash and cash equivalent and also calculation of goodwill. Okay, yang ni pula working dia. Okay, and this one is the last. the last working. Okay, kelas? You still with me?
Yes, sir.
Okay, good. Ada apa-apa soalan ke? Di tengah kat
Recording
mana
ni
ni?
nanti saya share.
Apa dia? Ya? Apa soalannya?
Recording ni nanti saya share dalam grup
InsyaAllah. Allah share. Dia nampak macam ada yang kat library tadi. Lalu library tadi macam ada yang kat dekat library. Tapi tak pastilah awak ke bukan ni. Some of you maybe. Ataupun dekat rumah sewa masing-masing. Okay, kita pergi pada soalan yang kedua. Okay, soalan, the first question just now is about acquisition of subsidiary during the year. Okay, the second question is about acquisition, about disposal of subsidiary during the year. Okay, so sebelum kita discuss yang disposal of subsidiary, saya bagilah break ya, berapa minit? 5 minit buat break ya. Okay, welcome back. Okay, this is the question for February 2021. Okay, this is question 2. Given below are the consolidated statement of financial position as well as consolidated statement of profit or loss for Meru Berhad for the year 2019 and 2020. Okay, 2019 and 2020, we can see from here that the property, plant equipment increase, investment in associate also increase, goodwill on consolidation decrease. So this could be a signal that the company has disposed one of the subsidiary. Short-term investment increase, tax recoverable increase, cash and bank balance increase a bit, receivable increase a bit, and inventories also increase. Okay, equity and liabilities, ordinary shares increased by 500,000. Retained profit increase, non-controlling interest also increase, redeemable debentures increase, account payable increase a bit, tax payable. Okay, tax payable. In 2019, we have tax payable. In 2020, we have tax recoverable. So these are the two opening and closing balance. The opening balance is payable. The closing balance is recoverable. Next, consolidated statement of profit or loss. Okay, revenue 4.34 million, cost of sale 1.66 million, gross profit 2.68 million, selling and distribution expenses 435 million, admin expenses. Okay, actually the revenue is 4.34 million, cost of sale is 1.66 million, gross profit is 2.68 million, selling and distribution is 435,000, administrative expenses is 235,000, other expenses is 349,000. And there is the share of profit of associate 87,000. The profit before tax is 1,758,000 and the taxation is 546,000. Profit after tax is 1,212,000. Next. Profit after tax attributable to non-controlling interest is 439,000 and the balance goes to equity holders of the parent 773,000. Okay. Meru Berhad, retained profit. Okay. Consolidated statement of changes in equity for the year ended 30th June 2020. The retained profit brought forward of the group is 1.25 million. Profit for the year is 773 million. Dividend paid by the parent is 177,000. Okay. Just now profit is 773,000. Dividend paid is 177,000 and retained profit carry forward is 1.846 million ataupun 1,846,000. So we make sure that this figure is the same as stated here, 1,846,000. Okay. Additional information, number 1, Administrative expenses include the depreciation of property, plant and equipment, number 1, okay, amounting to 250,000. Number 2, gain on disposal of building. Number 3, gain on disposal of kapal Berhad. And number 4, impairment of goodwill. So there are 4 items included in administrative expenses. So it looks like contradicting item. Dia kata included in admin expense are depreciation is okay, but gain or disposal of building, gain or disposal of subsidiary, okay. So it look like contradicting, but okay, we don't have to worry about that because we are following the question. According to the question, included in admin expense are these 4 items. So 2 are expenses and 2 are gain. Other expenses include current year debenture interest. Other expenses include current year debenture interest. During the year ended 30th June 2020, a building with a carrying value of 830,000 was disposed for a cash consideration of 1.3 million. And 1.3 million. So there is a gain there. Carrying value is 830,000, but the disposal price is 1.3 million. There is a gain on disposal. So this one is answering the additional information number 1, gain on disposal of building. Gain on disposal of building. Can you calculate how much is the gain on disposal of this building? 1.3 million minus 830,000. And
470.
yes, good. 470,000. Okay. And then number 4, on 1st July 2019, Meru Berhad sold all its interest in 75 owned subsidiary, Kapal Berhad, for a cash consideration of 500. At the date of disposal, remaining goodwill on consolidation related to the acquisition of Kapal Berhad amounted to 30,000. Jadi kat sini ada lagi baki goodwill yang belum kita write off ataupun belum kita panggil impairment. Belum ada impairment, ada baki sebanyak 30. So we need to calculate the gain or loss on disposal. Okay, the gain or loss on disposal. Dia kata dia punya consideration is 580,000 and we need to calculate what is the actual gain. And what is the actual gain from this disposal. Next, number 5. The date of disposal, the fair value, number 4 actually, still number 4. At the date of disposal, the fair value of assets and liabilities of Kapal Berhad were as follows. Property, plant, equipment, 380,000, inventories, 188,000, accounts receivable, 65,000, cash and bank balances, 50,000, account payable, 40,000, and tax payable is 33,000. So out of these 6 items, 4 items are asset and 2 items are liabilities. So from there we can calculate. You can calculate the amount of fair value of net asset of the subsidiary on disposal date. Number 5, 500,000 of 10% debentures had been issued at par on 1st July 2019, and full year debenture interest was paid during the year. Okay, so this is actually the increase. The reason for the increase in debenture just now. Debenture initially is 3 million. Debenture is 3 million at the beginning of the year, and at the end of the year is 3.5 million. So this is the one. Issue of debenture for cash, 500,000. So this one is under the financing activities, issue of debenture. At the same time, we have to calculate the amount of debenture interest. Yeah, the amount of debenture interest was the new debenture was issued on 1st July 2019. What is the date of the statement? Date of the statement is June 2020. 1st July 2019. It means you can calculate the debenture interest for full year, 1 year, because disposal of debenture, issued of debenture is on 1st July 2019. The short-term investment qualified as cash and cash equivalent. Number 7, the non-controlling interests are measured at its proportionate share of the fair value of the identifiable net asset of the subsidiaries on the date of acquisition. A. Calculate the gain or loss on disposal of investment in Kapar Berhad. B. Prepare the consolidated statement of cash flow of Meru Berhad for the year ended 30th June 2020 using direct method. So the first question just now, July 2022 is indirect method, and there is a purchase of subsidiary. And this one is direct method, and there is a disposal of subsidiary. So the question is actually a different set of question, So we are lucky because we tried 2 questions and the questions are actually different from each other. Okay, so the first one, calculate the gain or loss on disposal. And the second one is to prepare the consolidated statement of cash flow. Okay, so let us look at the answer. Can you see?
Boleh, sir.
Can you see the word file?
Boleh, sir.
Yeah, okay, good. Okay. So the second question, yeah. For the second question, question number 2. Calculate the gain or loss on disposal of investment in Kapar. Yeah. Okay. So you know that the sales proceed for this particular investment is 550,000 or million. Thousand or million.
1,000.
1,000, yeah. Okay. So sale proceed is 550,000. And then the fair value of net asset, we can list down and put the total. Okay. Property, plant, equipment, 380,000. Inventory, 188,000. Account receivable, 65,000. Cash and bank balance, 50,000. Minus account payable, 40,000. And tax payable, 33,000. Okay. We get 610,000. 610,000 times 75% equals to 457,500. So we are comparing the sale proceed 550,000 and 457,500. Okay. So basically the initial gain is 42,500. Yeah, 42,000. Betul ke 42? Bukan 42. 42 plus 50, 92,000. Yeah, 92,000. The initial gain is 92,500 because 550 minus 457.5. Yeah, and then we have a goodwill remaining of 30,000. We have to minus this, okay, because all the investment was sold and the subsidiary is not the subsidiary anymore. Okay, so gain or disposal of investment is 62,500. Okay, 62,500. Now we go through the cash flow statement. Okay, So for the cash flow statement, under the direct method, we have 3 items in our cash flow from operating activities. The first one is cash received from customers. The second one is cash payment to suppliers. And the third one is cash payment for expenses. So you can see from there how many ticks that we get for the cash received from customer. The 3 ticks, the cash payment to suppliers, 6 cash payment for expenses, 8. Okay, so it 3 ticks mean 1.5 marks, 6 means 3, and 8 means 4 marks. So kat sini pun kita dah boleh dapat 1.5 campur 3 campur 4. 7, 8.5 markah daripada cash flow from operating activities. Okay, so let us find the cash received from customer. Do you know how to calculate? Do you remember how to calculate cash received from customers? We are going to open our account receivable account. Yeah, kita nak buka account receivable for the first one, second one, account payable dan inventory. Yang ketiga kita buka expenses account. And expenses account are actually comprising of many items, including gains, as mentioned by additional information just now. Okay. Okay, so kita tengok yang pertama, account receivable. Okay. So account receivable, the balance brought down of account receivable is 580,000 and carried down is 635,000. Okay. This one, yeah. Can you see the account receivable?
Boleh, sir.
Okay. So the account receivable balance brought down is 580,000 and carried down is 635,000. Then when we check our statement of profit or loss, we have a revenue of 4,340,000. And then there is a disposal of subsidiary. Yeah, disposal of subsidiary. When disposal of subsidiary happens, okay, we can see that the subsidiary has 65,000 account receivable. So when we dispose the subsidiary, this receivable also taken out from the group. That's why account receivable is credited with 65,000. So now 580 plus 4340 equals to 4.90 and 4.92, 4,920,000 minus 635,000 minus 65,000, and the balancing figure is 4,220,000. So this one is the cash received from customer. Yeah, cash received from customers. You can see that the revenue is 4.34 million, and the company managed to collect 4.22 million. So it shows that the company is very good in collecting the account receivable. Okay, that is our comment. Then the second one, we are going to calculate the cash paid to supplier. Cash paid to supplier. We're going to open account payable and inventory account. Account payable and inventory account. First, we open an inventory account. Okay, the left hand side here, inventory. Then you see the inventory account, balance brought down 690,000. And then cost of sale is 1.66 million. And then we take out the inventory from the subsidiary, 188. And don't forget that we have carried down of 785,000. Okay. So for this inventory account, the credit side is greater than debit side. The credit side is 1660 plus 188 plus 755 equals to 603. But the debit side of inventory is only 690. Therefore, there will be a balancing figure. A balancing figure in the debit side of inventory account, and this balancing figure is known as purchases. 1913. 1,913,000. Yeah, that is purchases. And these purchases will be brought to account payable. Will be brought to account payable. And the account payable, we start with balance brought down of 496,000, balance carried down of 500,000, disposal of subsidiary 40,000, and we put the purchases under the credit side of account payable. Because purchases will increase the account payable. Now, we add the balance brought down and purchases. So it is equal to 2,409,000. Okay, 2,409,000. And the credit side is greater than the debit side. 2,409 minus carried down 500 minus disposal of subsidiary 40 equals to 1,869,000. 1,869,000. So just now, okay, the purchases is 1,913,000. Out of this amount, the company managed to pay 1,869,000. So the company is also good in managing the account payable because the difference between the amount of purchase and the amount of cash paid to supplier is only a very thin. Yeah, the difference is very thin. 1913 and 1869. Okay, so we have found two figures. The first one is cash received from customers, and the second one is cash paid to supplier. Okay, now we are going to calculate the expenses paid. The expenses paid. Okay, so expenses, and based on the statement of profit or loss, there are how many expenses? Based on statement of profit or loss, we have admin, we have selling and distribution, we have what more expenses? Ada berapa expenses kita ada dalam soalan? All those expenses are included in this calculation. We have selling and distribution, we have admin expenses, and we have other expenses amounting to 435, 225, and 349. So all those expenses will be put under the credit side of expenses account. SOPL 435, SOPL 225, SOPL 349. Okay, and then we have calculated the gain on disposal of subsidiary just now, 62.5. 62.5, and then we need to calculate the a few more things, yeah, that is including the interest, yeah, including the interest, and also depreciation, and also impairment of goodwill before we arrive at the cash receipt, the cash paid for expenses. That's why we have 4 points ataupun 4 tick for this, 4 marks for this. Yeah, ada 8 tick dan kita ada sebanyak 4 markah lah untuk expenses ni. Jadi yang kita boleh dapat, the thing that the information, the amount that we already have SOPL 3 items. Gain on disposal of subsidiary 62.5. Okay, gain on PPE not yet, interest not yet calculated, depreciation not yet, impairment of goodwill not yet. Okay, and can we please check? Okay, what about depreciation just now? Are we given the amount of depreciation? Additional information. Yes, depreciation already given 250. So 250 is already given. So yang tak ada lagi? Yang tak ada lagi adalah interest, kena calculate, impairment of goodwill, kena calculate, kemudian gain on property, plant and equipment. Okay, so how to find all this? To find all this, first we need to calculate the interest. How much is actually the amount of interest that are included in the other expenses are interest. So how much is the interest? How much are the interest? Okay, kita tengoklah dia punya, kita tengok debenture dekat bawah tu kan. Okay, debenture account, the debenture, the amount of debenture is 1 million plus 500,000. So it's equals to 1.5 million. And the interest is 10%. Yeah, 10% interest, 10% times 1.5 million equal to 150,000. So we put here 150,000. Dalam expenses ni kita masukkan 150,000. Ya, interest kat sini 1.5 million. Eh, 1.5 million. 1.5 million times 10% equals to 150. Okay. So tinggal dua lagi yang kita belum dapat, iaitu impairment of goodwill dan juga gain on disposal of property, plant and equipment. Okay. So kita pergi pada goodwill. Kita nak tahu the amount of impairment. Okay. Okay, goodwill. Balance brought down of goodwill is 150,000. And then when we dispose our subsidiary, we dispose 30,000 goodwill. Okay, so goodwill, credit side, subsidiary 30. And the balance carried down of goodwill is 80. So 150 minus 30 minus 80, the balancing figure is 40. So 40,000 is actually the impairment of goodwill. So we put this impairment of goodwill under the debit side of expenses account. Okay, expenses account. And lastly, the gain on disposal of property, plant, and equipment. Let us go through the property, plant, and equipment. The property, plant, and equipment balance brought down is 4.68 million. And the balance carried down is 5.86 million. Okay. So during the year, there is a depreciation of 250,000. There is also a disposal of property, plant, and equipment just now. The cost of the property disposed was 830,000. And another one, okay, the amount of property, plant, and equipment of the disposed subsidiary, 380,000, is taken out from the property, plant, and equipment. So when we add together the credit side of the property, plant, and equipment, the total is 7,320,000. Whereas for the debit side of the property, plant, and equipment, it is only 4,680,000. So there is a balancing figure of 2,640,000. And this balancing figure is actually cash paid, cash paid for purchasing additional property, plant, and equipment. Okay. But that one is property, plant, equipment. The the balancing figure in cash is actually for investing activities. But what we want to know is actually, the gain on disposal of subsidiary. So just now the gain on disposal of property, plant, equipment. Actually, just now we have discussed. I asked you to calculate how much is the gain on disposal of property, plant, equipment. The disposal price is 1.3 million, and the carrying amount is 830,000, and your answer is 470. So actually we have calculated. I forgot them just now. Yeah, the calculate gain on disposal of PPE is 470. Okay, so when we add together, the credit side is greater than the debit side. The credit side is 1,541,500. Okay, we have to minus the interest 150, depreciation 250, impairment of goodwill 40, and the balancing figure is 1,101,500. So that is actually the cash paid for expenses. So we take a lot of time to calculate the three items, because the three items also brings a lot of marks for us. Cash received from customers, 4,220,000. Okay, cash payment to suppliers, 1,869,000. And cash payment for expenses is 1,101,500. So cash generated from operation is 1,249,500. And then the tax paid and interest paid. Okay, let's look at the tax account and interest account. Okay, tax account and interest account. Tax payable. Okay. So tax payable balance brought down is payable. Balance carried down is payable. Okay. And the balance brought down is payable. Balance carried down is recoverable. Both are credit side of the tax account. Okay. So balance brought down from the entity from the statement of profit or loss, the tax expenses is 546. And okay, the tax payable of the subsidiary taken out 33 and the carried down is 30. So the balancing figure is 973. This 973 is actually the amount of tax paid during the year. Okay, tax paid during the year. 973,000. What about the amount of interest? What the amount of interest? We know the amount of interest. Okay, the interest rate is actually 150,000. How do we get this figure? 1.5 million times 10%. Okay, so the cash inflow, cash inflow from operating activities is how much? 126. 126,500. Cash inflow from operating activities. 126,500. Now we go to the cash flow from investing activities. Okay, cash flow from investing activities, we have 4 items here. The first one is purchase of property, plant, equipment. The second one is dividend received from associate. The third one is proceeds from disposal of PPE. And the fourth one is disposal of subsidiary. Okay, so the easiest one is to get the proceed from disposal of property, plant, equipment, because it was mentioned in the additional information that the property was disposed for 1.3 million. So that is a free mark actually, 1.3 million. And then disposal of subsidiary. Disposal of subsidiary, we dispose the subsidiary and we receive 550,000. 550,000. At the same time, the subsidiary is having 50,000 cash. So 50,000 is taken from the group. 550,000 received and 50,000 taken up from the group. So 550 is inflow, 50 is outflow. Therefore, 550 minus 50 is equal to 500. So disposal of subsidiary brings an inflow, net inflow of 500,000. What about the dividend received from associate? And dividend received from associate, we need to open the associate account. Okay, investment in associate, balance brought down is 278. Balance carried down is 355. And the share of profit for the year is 87. So the balancing figure is 10. Balancing figure is 10, yeah, because 365 minus 355 equal to 10. Therefore, dividend from associate is 10. And last one is purchase of property, plant, and equipment. So the purchase of property, plant, equipment, we need to open the property, plant, and equipment account. And just now, okay, we have discussed actually the property, plant, equipment account. The balancing figure is 2,640,000. So that is the purchase of property, plant, and equipment. Okay, so property, plant, equipment, dividend received from associate, proceed from disposal of PPE, and disposal of subsidiary. We have 4 items there, and the total amount, the total amount is negative 830,000. So what are we going to write here? cash outflow from investing activities. Cash outflow from investing activities, negative 830. And the last part is cash flow from financing activities. Cash flow from financing activities, we have this first one, issue of share. You can see that the ordinary share capital increased by 500,000. And then payment of dividend by holding, also given in the additional information, given in the statement of changes in liquidity actually, 177, we don't have to find. And then payment of dividend to NCI, we need to calculate. And issue of debenture, 500. We don't have to calculate because we just look at the opening balance and closing balance. So there is one more left, that is dividend to NCI. Calculate dividend to NCI, we open NCI account. This is NCI. Balance brought down of NCI is 735,000. Balance carried down is 978,000. Okay. The amount of profit attributable to NCI based on statement of profit or loss is 439. And then the disposal of subsidiary just now, disposal of the subsidiary, it involved a reduction in 152,500. 152,500 of the total amount. Okay. So how do we get this 152,500? 152,500 is actually 25%. 25% of the fair value of net asset of subsidiary on disposal date. Just now we calculate the gain on disposal. Okay. So when we calculate the fair value of net asset, the fair value of net asset of subsidiary on disposal date is 610. Now we want to know how much is 25% of this. %25 of this. 610 times 25%. The answer is 152,500. Yes, yeah, 152,500. So 152,500 adalah disposal of subsidiary and therefore a reduction in non-controlling interest. Jadi mungkin kalau kita jawab soalan ni, yang kita susah nak cari ataupun kita tak ingat macam mana nak calculate adalah yang ni lah, disposal of subsidiary. So 735 plus 439 minus 152.5 minus 978 equals to 43,500. 43,500 inilah yang kita panggil dividend, paid to non-controlling interest. Itulah dia 43.5. So jadi kita punya cash flow from financing activities nampaknya positif, cash flow, cash inflow. Cash inflow from financing activities. Cash inflow from financing activities is 779,000. So we add the three together. Operating just now 126.5, investing 830, financing 779.5. So when we add the three together, there is a net change in cash and cash equivalent. Net change ni sekarang ni kita namakan dia sebagai net increase. Net increase, Net increase in cash and cash equivalent 76. And then cash and cash equivalent at the beginning of the year 533. At the end of the year is 609. So how do we get this one? How do we get this 533 and 609? Okay, we open back the question. We have two items in the cash and cash equivalent. So dalam cash and cash equivalent kita ada dua item. Terdiri daripada apa dia? Satu cash and bank, satu lagi short term investment. Dapatlah kita 533 and 609. So we can check our answer. Okay. So lastly, before we close our class, okay, you can take the picture of this the answer. Okay, first picture, gain on disposal, then the first part of the consolidated statement of cash flow up to the investing activities, and financing activities. Then all the workings. Okay. So I think that is all for today. Okay, insyaAllah kalau kita diizinkan kelas esok, saya on saja kelas esok So kelas esok insyaAllah kita tengok soalan satu set lah, soalan final exam. Satu set soalan final exam. So mungkin kita tengok satu soalan. Kita teruslah kita tengok soalan Julai 22 Tengok soalan Julai 22, soalan 1. Ini soalan 1. So cubalah tengok-tengok. Okay. I know that you are busy, but okay, you have to manage your time. Okay, so that everything will be in order. Okay, ada apa-apa soalan kelas sebelum kita akhiri kelas kita?
Tiada, sir.
Tak ada. Okay, thank you for coming to class. Okay, so we end our class today with surah Al-Asr. Bismillahirrahmanirrahim. Wal asri innal insana lafi khusr illa alladhina amanu wa amilus solihat wa tawassaw bil haqqi wa tawassaw bis sabr. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam.
Thank
Thank you, sir.
Okay.
Thank you,
Thank you,
sir.
sir.
Thank you, 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 sir.